Well, I'm doing my best to get this one recorded during the halftime of the game, but I won't give you any updates in case you're recording it for later. Anyway, let's start out with the fact that Scott Walter and I did an Optimus video earlier today, which you absolutely should not miss. I'll put up a card at the end of the video for that one. The huge takeaway from that video was the announcement by Brett Adcock of Figure Robotics that they have a deal with BMW. Of course, that was yesterday's announcement, and that they have been approached by every other major OEM in the automotive industry, and that they have been also talking to the top 50 of the Fortune 500 companies about their bot. Well, this will wake Wall Street up to the potential for humanoids. With Tesla being maybe the only company, certainly the one with the closest pure play available about the most important product launch in human history, the investing class will be very likely to start thinking about how to position themselves. This is the kind of situation where those of you who watch my channel and follow other thought leaders here on YouTube or on X have had an advantage, an arbitrage opportunity. You have had knowledge. There's a knowledge gap between you and what the street knows and what the street understands. That gives you an opportunity to buy Tesla stock at much lower cost than what it is worth right now, given the Optimus opportunity. This is not investment advice, of course. Anyway, since the potential for Tesla bots is something on the order of $60,000 per year per bot, even 100,000 bots being out in the wild would add another $6 billion in profits. Then in year two, if they only ship another 100,000, that'd be $12 billion in profits in the second year, et cetera, et cetera. The reality is they're likely to ship more like 1 million bots in the second year. So now you're looking at 60 billion in profits, plus the $6 billion from year one. And then the next year, guess what? That's $126 billion in profit. You get the point. Anyway, this is a crazy opportunity. These are also conservative estimates, in my humble opinion. They could make a lot more than 1 million bots a year in the future, easily. This is not a product like a car. This is very easy to ramp up, as everybody will tell you. Well, this upcoming week will be filled with critical reports, including Tesla's earnings report and call, and that's what we're going to cover down below, all of the upcoming stuff that's going to be coming this week. Now, this is Randy Kirk, of course. You want to like, you want to subscribe, and you want to hit notify. I will put a card up for that Scott Walter video later, but tomorrow you want to hit notify because Brian White will be on around noon. Larry Goldberg, as usual, about 5 o'clock. Both of those are California time. If you haven't bought your Cybertruck bottle opener, this is a great time to do it for the rest of the month. 20 bucks, 20 bucks, 20 bucks. Multiply how many you want times $20. No discounts for thousands or, well, okay, maybe. But anyway, and then send the money to paypal.me/Randy Kirk, all in lowercase letters. All the information is down below. Remember to say whether you want the camo or you want the regular, and also add 20 bucks for freight outside the United States and 30 bucks for the Pacific area. All right. Now from Telescope. Oh, join Patreon, join Patreon, join Patreon. $3, $5, or $10. All right. The Telescope is reporting. They are pleased to share that full self-driving beta version 12.1.2 is now going out to some customers. And that includes vehicles with hardware 4 for the first time. And they gave a link to where they got that information. I think this is still just a teeny bit sketchy, but it looks like it might be true. Now, this one from the NASDAQ, NASDAQ.com is reporting this. This is the headline. Tesla stock is still worth considerably more based just on its free cash flow. It doesn't say alone. I'm adding that in there. Just on its free cash flow. Tesla Inc. will report its fourth quarter earnings this week on January 24th. The company could produce positive free cash flow, unique among EV makers. Shoot, unique among auto companies. Tesla stock is at or near term lows and is worth a great deal more. I discussed this in my last Barchart article 3 weeks ago, and I suggested that Tesla stock could be worth $318 per share with a market cap close to $1 trillion. Based on more recent numbers, I'm revising my target price down a tiny bit. I added that to $286.24 per share. However, that is still 35% over today's prices. the free cash flow could push Tesla stock 35% higher. This is based on the company continuing to produce positive free cash flow, just as it did last quarter. It generated free cash flow equal to 3.4% of its quarterly revenue. In the prior year, the free cash flow margin was 3.87. This makes Tesla the only North American company producing EVs that generates positive free cash flow from EV production. Moreover, we can use this margin figure to produce a target price for Tesla stock. For example, analysts surveyed by Seeking Alpha estimate 117.45 billion in revenue for 2024 is the numbers that people are throwing around. I think it's be a lot higher than that. So using the 3.87 free cash flow margin, Tesla could make 4.55 billion in free cash flow next year. That could lead this year to 2024. That could lead to a 910 billion market cap using a 0.5 free cash flow yield metric discussed using the free cash flow metric that he used in his last article. That is 34.9% higher than today's price. In other words, Tesla stock could be worth that much more, And the analysts see significantly higher price. Other analysts also see higher prices for Tesla stock moving forward. This shows that the stock may have reached a near-term bottom ahead of its earnings release, which is what I said. Was that yesterday? I said that in the afternoon show. For example, the average price target of 37 analysts surveyed by Refinity, seen on Yahoo Finance Tesla site, is $228.65 per share. That reflects a potential upside of 7.75 from here. In addition, Anachart.com, a new sell-side stock analyst tracking site, shows that 35 analysts have an average price target of $222 per share. That reflects a potential 4.68 upside. My target, the guy who's writing the article, is based on the company free cash flow performance. The sell-side analysts tend to track the stock's performance, as can be seen in the Anachart's chart tracking of analyst past recommendations. The bottom line, Tesla stock seems to be nearing a low point, at least on a near-term basis. Once the company produces the earnings report, analysts are likely to revise their targets if, as should be expected, Tesla continues to generate positive free cash flow. All right, and then here is not a Tesla app, a very good reporter. Tesla's Cybertruck is capturing, the headline, Tesla's Cybertruck is capturing the imagination of the next generation. Since its release just over a month ago, the Cybertruck has been turning heads and sparking excitement among all age groups, but the reaction from the children is most telling. Social media is filled with videos of kids cheering and expressing their awe as Cybertruck glides by. This excitement is far more than just about seeing a new car. It's about witnessing a piece of the future right here in the present. All right, what's coming up this week in terms of reporting? The first thing will be on Monday, the U.S. leading economic indicators. These have been contracting by 3.5% over the 6-month period between May and November of 2023, and that was a smaller decrease than the 4.3% contraction over the previous 6 months. So you've got a full year of contractions. What are we expecting from the folks that were polled going into this report on Monday? They are expecting it to be down another 0.3%. So all of this is one of the reasons why I'm considering the possibility that we may be looking at some kind of a recession in the third quarter, looking more and more like that could happen. The biggest thing fighting that is the fact that the stock market, the S&P in particular, continues to go up. So these are the two things, I would say the two biggest things that I'm watching right now. And of course, what the Fed does is going to affect all of this. All right, then on Wednesday, nothing on Tuesday. Then on Wednesday, we've got the S&P Flash U.S. Services PMI. These are the purchasing managers, what they think is going to happen. They're showing that slowing from 51.4 to 51. That's their estimate, okay? And then on the PMI for the manufacturing side, they're showing that slowing also from 47.9 to 47.3. Both of those showing contraction. This would be more indications of what I was just talking about. Then on Wednesday, of course, we have the earnings report from Tesla. On Thursday, we've got the GDP number Of course, last quarter, it was the third quarter was 4.9% was the final number. This time they're predicting it to be 1.7, quite a substantial drop. Then we've got the initial jobless claims. Last week, I got this wrong. I had written it down wrong. I forgot the next day to tell you I got it wrong, but I'm telling you now. I said last week that it was still at like 202 or something. It was not. It was only 187,000 people last week on the initial jobless claims, which was a big drop, a huge drop, and way below what was expected. So now this number, which they've been getting it wrong almost every week, the folks who they poll are predicting 200,000. And who knows? I have no clue whether it be high or low or whatever, but it's a very big indicator for the Fed. Durable goods orders, they're predicted last month, they were up 5.4%. They're saying that's only going to be up 1.5%. Durable goods orders minus transportation, which last month was barely up. This month, they're not giving a number or it's flat. I can't tell which one they mean. I think they mean they couldn't get folks to give their prediction. Anyway, then we have the advanced U.S. trade balance in goods. No number given there. Retail inventories, I'm expecting those to be down. They were down last month. Advanced wholesale inventories, I'd also expect those to be down as they have been in other reporting that was in other given by other individuals. Then on new home sales, there were 590,000 last month. They're expecting that to go way up to 650,000. I know there's been a lot of incentives. I know there's been a drop in mortgage rates. So this would be possible. And this is the kind of number that they get a lot of other information that they can draw from in order to conclude what they've concluded. We've got personal income. This is on Friday now. We have this, all the PCE stuff comes in. So you get personal income. That was up 0.4% last month. They're expecting that to be up 0.3%. The Fed would like that. That would be just about right. Personal spending was only up 0.2% last time. They're expecting that to jump to 0.4%, maybe because of the Christmas season. I'm not 100% sure what they're thinking there. Then the PCE index, which was up 0.1% last month, they're saying will be flat. The core PCE index, which was up 0.1% last month, they're saying will be up 0.2% this time. And then the year over year number, which was 2.6 last time, they're saying no decision, no information. Core PCE was up 3.2 last month. They're saying that'll be up 3% on this one. And then pending home sale, I'm sorry, but pending home sales are saying will be up 2%. But I have so let me talk about these inflation numbers in terms of PCE being out this week. I want to say, first of all, I have some real issues with Truflation right now as they have adjusted their methods 3 times in the last 3 months, 2 of those times in the last 2 weeks. But it's still worth pointing out that they are now showing inflation under 2% at 1.85. If they are correct, and with the trend line definitely down, there's good reason to think that the Fed has already waited too long to lower interest rates. If the bond market thinks the true inflation is right, and if the PCE comes in similar to last month's, where the core PCE was down 0.1% month over month and has been down for 4 of the past 5 months, bonds could be up big. The Fed has stated that 6 months of core PCE is their #1 gauge of inflation, and this would suggest we're below 2% in line with Truflation's newest revision. Headline was negative last month, 0 the prior month, and then but for 2 months at 0.4 was at 0.1 or 0.2 for multiple previous months. I'm not sure what the Fed is waiting for as they say that this CPI, that the CPI is not as important and the PPI has been right in line with the PCE. Is that enough 3-letter acronyms for you? Anyway, we'll find out on Friday, but I noticed in the pre-market that bonds were starting to move upward. So speaking of that, where are the markets now? Let's take a quick look because the game is back on. So we need to finish this up. So just a second here. Let's go look at the pre-market. We have got, just a second here. We have got the bonds sitting at the, what do you call it? The interest rate on the 10-year is come down almost 3%. We have got all of the long bonds are down something in that range. Almost all of them right around that. The 3 years less, the 2 years only down 2. The yield is only down 2%, and all of the short ones are up at least somewhat. All right, then let's take a look at oil real quick. We have got oil coming in at as flat as it can be. Brent has dropped a little bit more, so it's getting closer and closer to getting back to that $3 spread, which is kind of interesting since I think the Red Sea is still having problems. And look here at natural gas, dropping another 7.58. I guess that the winter, there's enough of winter maybe in the bag that they're starting to think that these inventories in Europe in particular maybe are just too strong. I'm not sure what's going on there. I have not looked it up. I apologize. Gold is basically flat at 2032. Copper is down just a tiny bit. The dollar is right in the same ballpark. Bitcoin down 407 in the pre-market at 41,302. The futures, here we go. Futures Dow up 1%, 395 points. S&P up 58 at 1.23%, and NASDAQ up 200. That was Friday's market. I'm so sorry. I never see that in the pre-market, but the Dow is up 81.21%. The S&P is up 15.31%, and the NASDAQ is up 121. That's pretty strong in the pre-market, up 0.7. Well, that suggests maybe now by the time you see this at somewhere around 6:30 or so California time, these numbers could all be different, but usually this is pretty good indication of what's going to happen in the morning. Okay, so here's the card for that Scott Walter video. Right now, it's looking like it might be the second best, could even pass his previous video with me, but right now it's looking like it's going to maybe be the second best video ever for this channel. After over a year and 700 plus videos, this could be the second best video ever. So I'm going to highly recommend you go take a look at it. And then also join Patreon, support the channel. If I'm going to be able to, get these great guests on and make these videos, I really could use your support, especially in January, February, and March, when the money from the advertising side drops about 25%, just because the advertisers aren't willing to spend as much in those months as they are in the last 3 months of the year. Anyway, thank you so much for watching. Thank you so much for supporting the channel. Hit like, subscribe, and notify. It has been great talking to you. Let's go watch some football.